focus as well. Now, let's talk about money markets. Liquidity seems to be getting a little tight as we get to the end of the year. That's what the call rate is showing. It's jumped quite significantly. Lata is here to tell us more. Lata, over to you.
Yeah, the interbank call rate is the rate at which banks borrow from one another for a day. And that normally very closely tracks the repo rate, 6.5%. Because if banks are not paying, you can go to the Reserve Bank and borrow from them. That's the 6.5% rate. But it is today traded at a high of 6.9 and the closing rate is 6.85. In fact, this yield has been as high as 6.75 from March 17th or thereabouts. That is from ever since the advance taxes were paid. Now, this is a bit of it is habitual. The yields go up towards March 31st. One, because liquidity moves out on March 15th, March 16th, advance tax. But more importantly, banks don't want to lend much towards March 31st because you're just finishing up accounts. You want to shore up the balance sheet. You don't want mark-to-markets at that time. So generally at that time, there is a slight rise in yield. But this time, the bigger story is not just that the call rate has gone up to 6.9 or 6.85. The near-term one-month yields have also gone. If you take a CD, an SBI CD, or any of the other T-bills, Government of India T-bills which are maturing in a month, all those yields have also gone up by 25 basis points. And guess why? You all have got it right. Money is moving from liquid funds to debt funds with medium-term maturity because you are going to get a tax advantage. So what do the liquid funds guys do? They have to either get rid of their near-term paper. They don't want to get rid of their longer-term paper because those yields are still good. They want to get rid of their near-term paper, and that's why there's less demand for them. And they want to liquefy money and give it over to the debt mutual funds, which are buying longer-term paper or will buy. So this looks like it's a short-term problem. The one-month yields going up, which is up to March 31st. But call rates on March 31st itself, people are worried that it would go even to 7% and beyond.
Okay, so those are some very interesting trends from the money markets coming in. The year-end phenomena compounded with, of course, all the tax changes that we've seen on debt funds. Thanks for